Good afternoon, ladies and gentlemen, and welcome to the first session of this afternoon, which is entitled. Now I have to read this because I'm a Luddite. The Social Revolution. We have two fantastic speakers here with us today. Andrew Montlake from Corico, who has politely informed me that actually his presentation started 20 minutes ago. It's out there in the air, on the tablets, etc. And Andrew's going to talk to us about changes in the market and how we can use technology to help us. That'll be followed by Julian Wells of the rebuildingsociety.com, and he's going to be looking at social media for finance. And I have some experience that. It's usually a text from my daughter asking me to put more money in her bank account. And that's about the extent of my social media knowledge. So with that, I'll pass you across to Andrew. Thank you.
Thanks. Hello, everyone. Everyone okay? Right, I'm going to talk about the social revolution, apparently. First of all, a bit of audience participation. Who actively uses social media for business at the moment? Okay, not bad, about half of you. And of those people, have you all seen the benefits of it so far, or undecided? Who doesn't use social media at all for business but wants to? Okay. Anyone still afraid of social media? I am, scares the Jesus out of me. Anyone just not give a toss at all? No? Good. We got the right crowd then. Okay, I'm not a social media expert. Let me start by saying that. Although, to be honest, we're all social media experts. Social media is just an online conversation, and we all have conversations every single day. Everything that we've done at Corico is just done by trial and error. Trying something out, seeing if it works. If not, going back to the drawing board and starting again. So this presentation, there aren't any original ideas. It's not rocket science, but there are many proven ones. So what's the big idea? We hope to rewire the way people spread and consume information. We think a more open and connected world will help create a stronger economy with more authentic businesses that build better products and services. That was Mark Zuckerberg, the founder of Facebook. So already, although it's a social network, he's looking at how businesses can interact and how business can grow from it. Network markets are beginning to self-organise faster than the companies they have traditionally served them. Thanks to the web, markets are becoming better informed, smarter and more demanding of the qualities missing from most business organisations. Any broker knows that most of the clients who come to them now are much better informed. They already have a rough idea of what they're looking for, which can help us. It's not just about posting photos anymore. So social media is changing business. It's all about a movement from selling to connecting with the audience. And that's really the key point. No one wants to be sold to anymore, or they don't want to think that they're being sold to anymore. It's about moving from large campaigns, advertising campaigns, to small acts, more targeted, making people feel more important. And it's about marketing departments no longer controlling the message, but being a lot more transparent. And from the CEOs of some of the top companies, not hiding away in their ivory towers anymore, but being available everywhere. For me, it's all about Generation C. It's about Consumer 2.0, the age of the customer. And it's a fundamental shift in the way we communicate. It's about content. Everyone wants content. They want it authentic, they want to be educated and relevant to them. And most of all, they want free. They don't want to have to pay for that content. They want it at a time and a place that suits them. And they want to connect more, using technology to allow clients to connect when they choose. But they don't want to lose the touch part of it. It's very important that when you're looking at social media, you don't just go completely online. People always want to talk to people at the end of the day, which is why I think that the online mortgage situation hasn't really taken off yet. People will only go so far with a mortgage application until they think, hold on a minute, this is quite a big loan. I actually want to talk to someone before I press that button. And it's all about community. And that's really the key to all social media. And that sort of manifests itself around things like TripAdvisor, product reviews. No one goes online and just buys something. They always look at user experience. They don't trust company advertising anymore. Only 14% of people trust advertising, but 90% trust recommendations via social media. And it's all about, we all think we're the best at what we do. People aren't going to take that at face value anymore. They want it proved. They want to see that people have used you and that they've said that you're good. And in the financial services sector, there was a big piece of research. Social networks help people to share honest feedback and information that in the current environment, consumers feel is lacking from banks themselves. People don't trust banks anymore. And that's where independent financial advisors can fill a void. So it's all about embracing the change. Most of you are already doing it, you're just not realising it. Your employees are doing it. Discussions about your brand are happening now, you just might not know about it. Embracing it does get you closer to your customers. Everyone's got a smartphone these days, and mobile usage is going through the roof. Most people now, when they're searching for goods and services, they're looking at it on their phones, on the trains at a time that suits them. And you need to have a presence there if you want to continue to succeed. And word of mouth is now the #1 influencer on purchasing. It's not big advertising campaigns. It's all about your community telling you and advising on what you should do. Google search as well is putting a big weight on social footprint. So it's now looking at tweets, it's looking at Facebook links, and if they're Googling your company, the more you're engaging in that, the more you're showing up and the higher up the rankings you're showing. It helps you to develop strategic alliances, improves customer retention, and let's face it, there's a whole generation behind us who social media is all they're going to know. There are whole swathes of people growing up now, they're never going to go into a bank branch. All they're going to know is social media. The whole idea of it is to turn people into prospects, into clients, into advocates, and into referrals, and that becomes your marketing campaign. Your clients are your best marketing campaign. Don't just take my word for it. Social media marketing report, 88% said that it generated exposure for their business. Over 50% said it actually generated qualified leads. It does take a while sometimes, but it's about putting in the time and working on it. There are other areas where it's working. In the markets, social media is helping traders now. They're getting information very quickly about outside events, which is helping them, sometimes hindering them. And terrorists as well. They're showing themselves as more social media savvy. There's no mistake why a lot of these groups are using social media to get their message across, and that's because it works. So how do you go about it? You need to have a plan, and the first part of the plan is just to listen. Find out what they're saying, find out what they're saying about your brand, and then plan accordingly. What do you want to achieve with social media? You don't have to just go into it just because you think it's the right thing to do. It's all about having defined objectives and working out how those objectives can be met. So how and where will you do it? What's your strategy? Think about all that, and also who within your company will be leading it. Will it be yourself? Will it be someone else? And then decide what tools are you going to use to do that. In terms of the tools themselves, there's loads of different social media tools, but these are the main ones that people are using at the moment, and these are certainly the ones that we've had success with. LinkedIn. It's the social site for professional occupations, it likes to call itself, and you can see this as a client management system. Every time your client comes to you, make sure you connect to them on LinkedIn. Every time they update LinkedIn, whether it's their birthday or they change a job, it's a little key for you to go back to them and talk to them. You can ask for testimonials and referrals on that. Every time someone recommends you or posts a testimonial, it's shared with their group, and they can see who they're using and who they're recommending. And as we can see, that's the most powerful way of getting further business. You can ask for endorsements, and they help to create authority, and you can set up group discussions about the market there and get involved. And again, all of this shows you know what you're talking about, and it shows your authority. Facebook is a lot more difficult, and we've got a sort of a love-hate relationship with Facebook. We use it very much as a social brochure. The differences between Facebook is they actually have a business-orientated part of it, which not many people realise, called Pages. And that's really where your company site should sit, not on your personal page. Pages now rank in Google search results, so again, it all helps gaining visibility online for your business. Anyone can become a fan. It's not like Friends. You don't have to apply to become a fan. Anyone can become a fan. And all we do is link testimonials, put content on the wall, ask for comments, and go from there. There is a growth of Facebook advertising, which has a cost attached to it, but that's one of the biggest growing advertising spaces at the moment in the market. Twitter takes time to get into. We started Twitter about 4.5 years ago, and it's all about following the right people and listening first of all. Once you feel confident enough to get involved with the conversation, it's all about ensuring that you offer valuable links and commentary to your followers. So staying relevant, avoiding sales pitches. It's very important not to just sell on Twitter, because people will just not look at what you've got to say. They like relevant content, they like to be engaged, and they like something interesting. Blogs, 77% of UK consumers use information from blogs to influence purchase decisions these days. There's a blog on absolutely everything. Any kind of product comes to the market, you can bet your life that someone's written about it, reviewed it on some blog somewhere. Blogs are opinion pieces, so you can say really what you think. It's all about putting your personality across. Link elsewhere. Don't be afraid to use competitors' posts, comment on them, link to them. It's all about informing and educating. Again, don't sell and don't spin the truth. Any blog that spins the truth will be found out. Social media is all about transparency and honesty. Regulation. The FCA focuses on the communication rather than the media method used. And a lot of people are scared about using social media because of the regulatory risks. They treat it just like any other communication. It's no different. So, communications must be fair, clear, and not misleading. If you're putting something on Twitter, it's not about advertising a product, but it's about engaging and providing value to clients and prospects. So, putting up tweets like that, Virgin now have a $2.99 5-year fixed available for 7 days, is not what you should do, as I found out. Granted, that was meant to be part of a private conversation, which I accidentally tweeted, but I got a rap over the knuckles from the FSA, and quite rightly. That is not the type of thing you should be promoting on Twitter. It's better to use links and retweet articles. And lenders can use it too. For me, it's all about brand management and a listening device. They can use it to use press releases, release studies. It's another route to relay rate changes, criteria tips, service updates, conduct research with other brokers. And a lot of the smaller lenders, the actual CEOs, are using it to promote their own blogs and their own views on the market, which are really, really useful. What it shouldn't be used for is specific information on applications. So is it worthwhile? Well, very briefly, we have seen a significant increase in web traffic to our site. It has led to new leads, specifically some big new introducers which have found us via social media, in specifically Twitter. It's helped with recruitment via LinkedIn, and it's helped us with our brand awareness and our PR. And it is all free. It hasn't cost us a penny to get any of that, apart from the hard work and time involved. But you do have to make it work. So in summary, it's all about having a strategy, being engaging, spending time, and listening. It's not about being boring, predictable, and just doing it because you think that everyone else is doing it. Or it's not about just selling or trying too hard. It's not about the number of followers, friends. It's not a numbers game. It's all about how many of those people are actually engaging with you. And that's the key to it. And finally, just ignore everything I've just said. To be honest, there are too many people doing it well nowadays, so it's getting harder and harder for us to make ourselves heard. And the more people that come into the market, well, the worse it is for us. But that's not really true, is it? Because we need everyone's voices as an industry. We need to educate the public, the regulators, the press about what we do and promote independent financial advice. And that's really, really key. The press use Twitter, for example, brilliantly. And how they get their information, we're seeing more and more one-man bands, two-man bands getting traction with the press and getting their voices heard because of social media. And that's a great thing for the industry. Thank you.
Well, good afternoon. I can't believe
Do you
it.
want this?
You finished on time.
Is that on time?
Yeah.
I did rush.
When he sent me his slides yesterday, I said, "You're going to leave me about 5 minutes, aren't you?" Congratulations, Monty. Right. Good afternoon. So, I'm going to kind of follow on really from what Andrew was just talking about. I'm going to talk about the social revolution, but I'm going to be a little bit more specific in terms of talking about it in business terms. And then I'm going to talk about one particular market sector that's come out of the social revolution, which is peer-to-peer lending. So I'm going to talk about peer-to-peer lending, and I'm going to talk about it from a perspective for you as introducers and how you can be you can get involved in that element of the social revolution. So, the first 50 million. Everyone remembers their first 50 million, right? 13 years for commercial television to get 50 million people using it. 3 years for internet service providers, 1 year for Facebook, and 9 months for Twitter. The pace of change in technology is evident there. That's not just about not needing a TV license for these other ones, definitely. The story within that is really just this kind of acceleration of technology, and as you go further down there, things have become more and more social, and we'll talk about what that means. But 9 months to get 50 million followers. Facebook's over 1 billion now. Now, things like Facebook have been around for a good few years, so we all know about that, and most of us have probably used it and in our personal lives in some capacity, or we might not have done. There's becoming more reasons to use these things than to not use them, and I've got an example of that in a couple of slides' time. There's 1.5 billion people using social networks around the world now. I don't know what the breakdown of that is into certain countries, but it's obviously a really significant number. 80% of people that do anything online are interacting via social networks at some point. Companies are starting to use social technology more and more, and they're also, more importantly, starting to see benefit from it. I'll talk broadly about companies, but you can kind of relate this to your own businesses as I'm talking. But that's where business didn't used to care particularly about Facebook. It was seen as a very personal thing. And as Monty was saying, there's now Facebook business pages, and there's a big industry for marketing on there and advertising. Same with Twitter and LinkedIn, YouTube as well. Even some of the newer emerging platforms like Pinterest, which some of you may use, those are now being adapted for business purposes too. Just a couple more stats from this slide. 1 hour of every 5 that are spent online are now spent on some form of social network. And then a lot of that's driven through the fact that we've got smartphones now, of course. And businesses are adapting to social technology, and they're using it in some of the ways that Andrew was just talking about, listening, engaging, collaborating. Companies are designing products in partnership with their customers now, using social media. But they're also seeing some of the challenges that can be faced there. A lot of worry about sharing information. It's just not very natural that you just are very, very open about whatever you're doing and that you tell everyone, including your competition, at the same time. There's a real mindset there for people to get over. And there's an intellectual property and a reputational issue as well. McKinsey did a study, and in their study they worked out that it would be possible for businesses to become up to 20 to 25% more effective if they used social technology in an appropriate manner. So in that scenario, if a business can see that kind of benefit, all these worries that they've got about sharing information and their intellectual property, they'll find a way. We'll always find a way. When the case is so compelling to do something, you find a way around the obstacles. Okay, so I'm going to move on to talk quite specifically about the financial sector now. This was a nice quote that I found. The changes in financial services that are happening now are happening more quickly and dramatically than anything we've seen in the last 100 years. That's definitely true. That first slide of how fast everyone's got to 50 million users. Think how quickly things can evolve now through social media. It's my favourite phrase about social media is that it's never been easier to fail, because if your customers start complaining about you, or if anyone starts complaining about you, they start doing it online. It spreads like wildfire. So I think that's why companies are quite afraid of social media, is that all the sort of the dark secrets that they've got, or the really bad customer experiences that have been hidden away and confined to people writing in letters, or if they're unlucky, getting put on Watchdog, something like that. Now it just spreads. It's announced on social media. Stuff gets out faster than newspapers can be printed. So the acceleration of things going wrong is really quite dramatic. In the context of peer-to-peer, I mean, peer-to-peer is one innovative sector that has come out of the fact that we've got a social platform as a country and as a world, really. There were some drivers that led to the peer-to-peer side of things coming through. I'm talking peer-to-peer lending really now, but consumers and businesses both feeling that they're getting a bit of a raw deal from the banks. People getting poor returns on their money, businesses wanting to borrow money, and individuals wanting to borrow money as well, because peer-to-peer is not just a business product, it's also something that individuals can benefit from. The fact that we're all so into social media and Facebook and Twitter, we're very collaborative now. We're much more likely to do things with other people. We're not quite so private in our lives. So doing things with our money in public is now much more acceptable. Technology is much smarter now, so these things can be done a lot more cost effectively. And we've reached a point where you don't necessarily need a bank. There's examples in lending, insurance, currency exchange, where people have just taken institutions out of the equation and they're just transacting with each other. So in the peer-to-peer lending, a site like Zopa, people are taking out personal loans and they're getting the personal loans by other people putting money in. There's no bank in the middle there, and so no one's sort of kind of top slicing all the margin off. Same, there's several currency exchange businesses now where you can just trade your currency with other people. You don't have to pay a big commission to an exchange rate business. And there's more and more happening in insurance now, where insurance can be done on a peer-to-peer basis. But some of this comes with a little bit of a warning, because there were a lot of positives on that last slide, that everything's more possible now and more engaging and more collaborative. But this quote here, consumers need to learn that everything they put into the public domain is going to be used to judge them in future, whether they like it or not. What does that mean? Well, if you think that everything you're doing on social media, everything you ever post, every bit of activity is there and viewable, it can be used to assess you. So it's quite likely that the whole idea of credit scoring will involve a degree of social scoring, and you get a social score as well as a credit score in future. And I know that there are This is used a little bit in underwriting already, where if people don't have a Facebook account, that makes them be judged as a higher risk to lend to, because they're hard to find. So if you've got a Facebook account, if you've got a Twitter account, that means that they know where to find you. You're more likely to be easy to track down if they need to talk to you. So people that are quite invisible may actually find that that is hindering them in future when they're trying to get credit or other financial products. So there may become other reasons to go on social media beyond the idea of just collaborating with people. It may become more of a hygiene factor in our lives. This Rebuilding Society is the business that I'm sort of talking in the context of today. I just want to explain how it works, just so that you get an idea of the kind of this type of provider, because it's quite new. Some of you may have used Funding Circle or be aware of Funding Circle, and there's a lot of similarities there. This is an online business. People go onto a website and register themselves as a user. Businesses put in applications for finance. They tell their story. They explain why they want to borrow some money, how long they want to borrow it for, and they put their financials up there. That then gets promoted to the user base of the site, who are investors, and people get the ability to bid in an auction fashion to lend to that business. So a company might be trying to borrow £50,000. Everyone goes on and bids. So I might decide, right, I quite like that business. I'll lend them £500. I'll lend them that at 10%. Andrew might go on there and say, well, I'm going to lend them £3,000, but I'm going to lend them it at 15%. Because I think that it's a higher risk than you do. We might both be successful in lending that money to that business, and they'll pay us back the interest rate that we've asked for. So what you end up with is a business getting a loan that's made up by a whole collection of people, each lending different amounts and receiving different interest rates. Everything's done electronically, so the loan completes, you get electronic statements, the money goes through into your account online. You can see how much you've made. You can basically track everything like you would do with a bank account or an investment. But it's just completely technology-led. It's just a platform that's enabling that to happen. It's not a bank. It's not a big institution with a load of people. There's not a high cost base. It's a new way of doing things. And so that is how peer-to-peer works. The potential in that market is vast. There's been less than £1 billion lent to date, which is probably over a 4 to 5 year period now when you're looking at that in earnest. There was a report recently suggesting that up to £12 billion a year could be lent through this sector. You start getting into numbers like that, and then the bigger institutions will actually start taking a lot of notice of peer-to-peer, which they are doing already. In terms of the opportunity, last year there was a £4 billion reduction in the lending to business. But 70% of business owners have never heard of crowdfunding or peer-to-peer as an option for them to go and get funding. So there's a massive awareness gap there of people not knowing that they can go and use some of this new form of finance. And there was some research that we did earlier this year as well that said 1 in 4 consumers would consider lending to UK businesses through a peer-to-peer basis when it was regulated, because it's not currently regulated. Just talk briefly about that now. So the FCA is going to regulate peer-to-peer lending from April next year. It's who laughed? Yeah. Now that's proving quite a tight time frame to adhere to. So it looks like there will be more of an extension for providers to get regulated. But I'm not going to talk too deeply about regulation, other than to say it's going to give the sector a lot of credibility. It's quite difficult operating as an unregulated product in a financial market when there are a lot of people like yourselves who are where consumers go to for advice, and you prefer to deal with regulated products, of course. When it is regulated, there'll be more protection for the people lending and borrowing. And it's a good thing. We see it as a really good thing that there will be regulation of peer-to-peer. There are some reasons listed down there at the bottom of the slide. I won't read them all out, but it's kind of recognition that this sector means something and is going somewhere, and that it's going to grow and continue to grow. It is already growing exponentially, and therefore it needs to be regulated. In terms of who gets involved, because some of this may sound quite conceptual, but it's a very real thing. there are businesses borrowing money through the Rebuilding Society platform from £5,000 up to £250,000. You can borrow more than that on some of the other platforms that are around as well. In terms of what people are lending, there are people putting £10 on and lending £10 to businesses. Conversely, the biggest lender on Rebuilding Society has lent £300,000 out to businesses. You get different types of lenders who come on the site. We use these three terms: flippers, hoovers and holders, which are kind of ways of classifying investment behaviour really, which ties in with the fact that the FCA is going to regulate peer-to-peer as an investment product rather than a savings product. And then introducers. Pretty much 90% of the deals that come through the Rebuilding Society platform come through brokers, mostly through commercial finance brokers. But that profile is changing over time as people get more and more up to speed with what's going on here. In terms of the future of this sector, it is still quite new. Most of the operators are offering something fairly generic. There's going to be more fragmentation. You're going to get providers that are specialising in certain sectors. So, for example, there is a provider that we've done some work with that just does finance for pubs via peer-to-peer. You'll get regionalised providers as well, just focusing on certain geographies and certain types of people, certain professions. It's going to become more and more accessible. There is more corporate money going into peer-to-peer. I think now that we're getting into the billions rather than the millions, then the banks are starting to look at the sector and think there's ways for them to use peer-to-peer. There's going to be some really big providers. I think there'll be a lot of very small ones as well, and the fact that it's all dynamic online technology makes that possible. Yeah, I'll skip over those last 2 points actually. There are a few myths about peer-to-peer lending, and I wanted to just spend a moment on those. One is that it's not a lending opportunity of last resort. So peer-to-peer isn't the thing to think about when you can't get finance for a client anywhere from any other source. It is actually it is a very good opportunity to get someone money at a good rate and quite quickly. So you can usually get funds within a month of applying. You can usually get them at a rate that's competitive with a bank loan, and you can get it with a lot more, a lot less admin of going through the application process. It's actually the underwriting isn't as stringent, which doesn't necessarily mean it's not as good, but it just isn't as it's not as drawn out a process. You won't wait months for a decision. Clients can get value beyond rates that they pay. If a business takes out a loan from 100 lenders, then that's 100 people that have a vested interest in their business. And sometimes if that business is a consumer-focused business, like a pub, or one example we had was a cake company, then you can generate more customers as well as the people lending you money. And that can help you to succeed, as opposed to just borrowing all the money in one go from one institution. The loans do perform well. That's another myth. The P2P loans in general have got a really good performance. The Rebuilding Society book is completely clean. There's no arrears on any of the loans that have been made. It's still a relatively small book at the moment, though. Funding Circle have lent over £150 million so far to UK businesses, and they've got a default rate of just under 1.5% at the moment, which is a much better performance than you'd expect on a largely unsecured commercial loans book. Finally, it's not too good to be true. It is actually a very viable sector. You get good returns. People that are lending money on peer-to-peer are earning in excess of 10% on their cash. Businesses that are borrowing money are getting loans from 10 to 12%, sometimes lower. And introducers who are putting deals in are also earning a commission, usually a 1.5% commission with most of the providers. So peer-to-peer is a kind of financial case study of how the social technology that surrounds us today is coming into the finance sector. What it means for advisors, opportunity to broaden your portfolio, have new products to talk about with your clients. You can earn commissions if you want to advise them on deals and actually submit deals that way. Or alternatively, if you just want to make straight referrals, then there are affiliate opportunities as well, where you can just basically take a small introducer fee for handing over a client opportunity. That wraps up my session. Thank you very much.
We've about 10-15 minutes left for questions for our speakers. Anybody have a question from the floor? Yeah, hold on, we'll get the mic to you.
I was just concerned about the use of blogs, which for positive feedback's great, but what about your competition using blogs to damage your reputation? How do you protect yourself against that sort of thing happening?
That's a very good question. And I actually I wrote down a phrase here, actually, because I thought that question might come up. Engage the trolls is something that I wrote down. For me, if someone's damaging your reputation online, the best method is dealing with it directly. And just talking to them in a sensible way and fighting your corner. That's one reason why you need to be online, because if those things are happening, you need to know about it. There was an example of who's come across housepricecrash.com. That's a great site if you want to laugh. There's no representatives here, are there? It's basically a group of people who just want the housing market to crash. And they had a campaign against Ray Bolger once. He said something very sensible in the press, and they didn't like it, and they started a little campaign against him. The people at Charcoal didn't duck from it. They answered every single point, and it grew and grew and grew. And you could see the change as it was happening. The more people from housepricecrash.com were getting involved and going, this is great, we're going to bring down this bloke, etc. But they dealt with every quote sensibly. They answered every question, every nasty comment they came back to. And before too long, you could see things starting to change. And one of the people on housepricecrash.com said, well, to be fair, at least they're dealing with things. They're answering the questions. This is quite a good point. And they dissipated it. And by the end of the day, it had all gone away. And actually, everyone had a good impression of the company, whereas they started out with a bad impression. So it's all about dealing with things head on, but don't get drawn down to their level. Just be sensible, professional, and deal with it. It is going to happen, unfortunately. There are sad people out there who do those things. And you can set yourself up as being professional and above it all.
Other questions? Yeah.
Talking about peer-to-peer lending, how can it be regarded as peer-to-peer lending when banks and institutions are joining in? Surely it's just another bank lending.
Well, if you look at at what peer-to-peer lending is, ultimately it is what banks do. It's just that banks are in the middle of it. I think that the fact that they're showing an interest in getting involved in the sector is because they can see the opportunity that's there on both sides of the equation. So banks will see it as a way to potentially do more lending and build up the balance sheet themselves. I can't hear you.
And get rid of the opposition.
Well, I mean, it could be that, or it could be a way of reinventing the banks. I think, I met with a building society this week and I was talking to them about peer-to-peer lending. And they were saying, well, it's not really for us because our customer base is much older and much more conservative and wouldn't be wanting to engage with that. But if we had a younger demographic and a more technology-savvy demographic, we might look at that product as, as another way for them to, another way for people to use their money. So, yeah.
Thank you. Any other questions? Yep, great.
Yes, on the peer-to-peer, how do you qualify the quality of the potential borrowers?
Go through a screening process. So with the businesses that are trying to borrow, they have to hit certain criteria. So they need to have a couple of years trading. They need to be limited companies. They'll need to have a profitable trading record, a certain size of turnover. Directors will need to be UK resident. So there's a way of excluding the businesses that are the more likely ones to fail, like startups and some of the sole traders and the smaller businesses.
Really businesses for, if you like, medium-sized SMEs, not the smaller firms.
It depends what you class as small, really. So I think if a business had a turnover of more than £100,000, then they probably can, they can probably qualify. It's the smaller kind of one-man band lifestyle type businesses that are harder to. It's harder to differentiate whether something is is trading as a business or if it's someone's kind of personal hobby business. Yeah.
Thank you.
A couple of questions, I think.
Hi, I don't use Facebook much, but my query was that in Facebook we will have, say, our customers who are linked with us, and there may be people who are in the same services that we give. So how to control that damage, or sometimes it may be damaging, sometimes it may not. Is there any way?
You don't have to really control it. It's all about engagement. So don't be afraid that your competitors are on there. Twitter, for example, we engage as a group of brokers in London, for example, and we all find ourselves commenting about the same thing. And actually, if they say something good, then I'll promote that, and they'll do the same for me. It's all about working together. A client will make their own mind up anyway. So if you're not afraid, don't be afraid of your competition. Embrace your competition. Anything they've got that's good to say, promote it, and I'm sure they'll do the same thing for you as well. And a client will make up their own mind. Clients who are social media savvy will pick out the most honest, educational and relevant company to them. And those are the type of clients that you want.
In effect, you are leading your customers to your competitors?
You're not really, because they're going to find those people anyway. If they're online, they're going to find them. So you're not necessarily leading them to them. People will make up their own minds, and in our experience, the ones who come across as the most honest and the most sure of what they do will be the ones that they choose anyway.
Thank you.
I think that's that mindset that has just changed. That it's really hard to get to grips with. Is why should I make everything available to the competition? It used to be difficult for people to decide to actually put things on their website that explained what they do. So I thought, well, why should I put a chart on showing the structure of my business so someone can just go and copy it? But you've got to think about it from the consumer perspective and give them what they want and expect, which is pretty much as much information as possible on the spot, free.
Okay, I'm going to close the session now with one last question from myself, and I'm going to ask you both for a prediction. So, Monty, we're sitting here in 20 years' time. Social revolution is moving at a pace. What does the mortgage transactional world look like? So I'll give you time to think about that. And Julian, same to you. It's 20 years on. Social crowdfunding has gone into a new era. What actually does that look like as we would sit here 20 years from today? Monty, you can answer first now. Julian time.
If I'm sitting here in 20 years' time, I'll be really depressed. That's a good question. 20 years' time, what's it going to look like? Do you know what? I don't think it's going to be massively different to what it is now. People will still do a lot of their business through intermediaries. They will still want advice. Yes, there'll be lots more technology. Yes, people will they'll find a lot more information online. But for me, if you're looking at taking out the biggest loan that you're ever going to take out, you only go so far. You can go all the way down to actually pressing the button. And I think whether it's now or in 20 years' time, I just can't see people finally pressing that button without taking advice. So I think things are going to be relatively similar to how they are now.
Well, I think in 20 years' time there'll be quite a few things different about the way that we go about our lives. I don't think we'll be sending emails anymore. I think we're on the way out of that one at the moment. I think in terms of crowdfunding, I think it will have become a globalised sector by then, and that you'll have the opportunity to sort of use providers all over the world, not just in the UK. I think it'll be a very slick process in terms of the way you can do financial transactions, but I think the thing that will really change is that it will become much more social, not just financial, and you'll be able to lend money and borrow money and do things with your money in a way that agrees with your personal values, and you'll be able to find opportunities to lend money to people, businesses or causes, however way you want to, and likewise you'll be able to borrow money from people that have got the same mindset and values as you. I think that's what the technology will do. It'll go beyond transaction and into into proper social of the way we think.
Excellent. With that, we'll bring the session to a close. Thank you very much.